Hi grade 12. So in today's video we are going to do question 2 from the question paper that was written last year. So this question, it was all about a fixed asset, cash flow statement, as well as ratio analysis. So they combined 3 chapters into one question. So please make sure that you watch the entire video and enjoy, guys. Alright, let's start with our question. Alright, so as I said, we are going to do fixed assets, cash flow statement, and financial indicator. Okay, so on question 1, they ask about multiple choice. Okay, let's read it. Question 2.1, choose the correct word from the given in a bracket. Write only the words next to the question. That is question 2.1.1 up to 2.1.3. Okay, then 2.1.1, they said unused consumable store at the end of financial year are classified as current assets or financial assets. What do you think before I answer? Okay, the answer is current assets. All the closing balance, consumable store, trade inventory at the end of the day we return back to our financial statement under current assets. Okay, then question 2.1.2, interest on loan is regarded as operating activity or financing activity. The answer is financing activity. Remember, under cash flow statement we record a loan repayment or loan raise under financing activity. Okay, 2.1.3, the director's report or audit report reflect the verbal explanation of company's activity and future plan. What do you think? The answer is director's report. Okay, then this was question 2.1, which is only 3 marks. Okay, the major question that we're going to do is the one that we are going to study now. Question 2.2, just Limited, the information related to the financial year end 28 February 2022. Required number 1, 2.2.1, refer to information number A. Okay, they said calculate the missing figure indicated by Roman figure 1 up to Roman figure 3 on the fixed asset. So this question have 11 marks, which means that you have to make sure that you show all the calculations. Okay, let's start with it. Let's go and check information number 1. Information number 1, there it is. We have a fixed asset note to the financial statement of statement of financial position, which is the balance sheet. Okay, we have our table of fixed assets, and after that they give us some transaction. Okay, let's take Roman figure number 1. They said we have to calculate the carrying value of vehicle. Okay, in this case they already give us a cost and accumulated depreciation. This is very simple question, guys, because what we are going to do, we are going to say Roman figure number 1, a cost price of 2,350,000, and then we subtract our accumulated depreciation of 840. Okay, if we do this on the calculator, it's gonna give us 1,510,000. Okay, very simple as that. So Roman figure number 1, it was not that difficult. Okay, then we have Roman figure number 3 of equipment. Okay, Roman figure number 2, apology. Okay, so if you check Roman figure number 2, they want us to calculate a depreciation. Okay, this is what we are going to do. We must first go through the additional information so that we can understand which exactly method do we use when we calculate depreciation under equipment. Okay, transaction number 1, they say extension to building were complete during the financial year, so it's not related to equipment. Number 2, additional equipment was purchased on 1 October 2021. Remember, our financial year is ending 28 February 2022, which means that in some way, somehow, we have to count a month. Okay, we have new equipment, okay, and they said equipment is depreciated at 10% on cost. So in this case, we are going to split a depreciation. All right. So remember, we have old equipment and new equipment. Okay. Let's start with a new equipment. Let's calculate depreciation. Remember, they said 10% straight line method. Okay. A new one, we're gonna get the cost price under our table under additions. We have 195,000 multiplied by a 10% of rate. Okay, remember it was purchased during the year, which means that we have to count what? A month. Okay, it has been purchased on 30 November 2021. Okay, it's from November until the following year, 28 February, on our year end, which means that it's gonna be, because it was purchased on 30 November, we're gonna count December, January, February, which is going to give us okay, apology guys, it was purchased on 1 October, okay, which means that we're gonna say it October, November, December, January, February, which is going to give us 5 months, okay, which means that we have to multiply by 5 over 12, okay, it's 5 months guys. I was accounting for the other one for vehicle, we are doing equipment now. Okay, then if you do all this calculation, you are going to get amount of 8,125. Simple as that. Okay, but we are not done. The reason is because we also have our old equipment. Okay, the rate that we are going to use is the same of 10%. Okay, now let's check. We have the cost of equipment, which is 640,000, and we also have accumulated, which is 612,000, and our current value is 28,000. Okay, our current value is 28,000. Now, if we do the calculation using the cost, we are going to say 640 multiply by 10%. Listen very, very careful, grade 12 in this one. If we calculate our depreciation using the cost, we are going to say 640 multiplied by 10%, which is going to give us 64,000. If you compare 64,000 and current value, you will find that the current value is lower, which means that this equipment is already outdated. In other words, it has exceeded its depreciation. So in that case, which means that we are going to use a rule of subtracting 1 from the current value. This step, you only use it if your depreciation that you calculated is more than current value. Okay, as you can see guys, even accumulated depreciation is very close to cost price, which means that there's no way that accumulated depreciation, if you add 64,000 that you calculate from accumulated depreciation, is going to exceed the cost, which means that it's outdated. So in this case, we are going to say it a current value of 28,000 minus 1. Okay, so which is going to give us an amount of, let me calculate, 27,099. So this is how you do it guys, if your current value is less than depreciation that you calculated, which means that this equipment is outdated, is very old, in other words. Okay, so I think that was a tricky part for this question. So after that, you're going to add 8,000 plus 27, which is going to give you a total of 36,124. Very simple, Very simple. Okay, now let's proceed. On the following transaction, we are going to do Roman figure number 3. Roman figure number 3, they said that we have to do what? They say that we have to calculate a disposal. Remember, when we calculate a disposal, we must use a current value of that item that has been sold. So this is what we are going to do. Okay, if you check transaction number 4, an old vehicle was sold at current value on 30 November 2021. The cost price of this vehicle was 252,000 and its accumulated depreciation on 1 March 2021 was 172,000. Okay, which means that in this case we have our cost price and we also have accumulated depreciation, but we have one little problem, guys. We have one little problem. The problem that we have is that the accumulated depreciation that they have or that they gave us is for 1 March, and we have to use accumulated depreciation of the same day that they sold what? The vehicle, which means that we have to add another depreciation so that we can get depreciation on 30 November 2021, not the one for 1 March. Okay, this is how we are going to do it. Yes, we're gonna say cost of 252 minus accumulated depreciation of 172,000, but we have to subtract another depreciation so that we can get depreciation of 30 November, which means that from 1 March until November is how many months? March, April, May, June, July, August, September, October, November, which is 9 months, which means that we have to calculate another depreciation. Okay, how are we going to do it? Very simple. Remember, they say that the vehicle are depreciated at 20% per annum on carrying value, which means that in brackets I'm going to show this. Okay, let me just show it on top here. We're just gonna say 252. We first subtract 172 because we are using a diminishing balance method. Okay, then after that we're gonna multiply by 20% and multiply by 9/12, which is going to give us the depreciation that we are going to subtract here. Very simple. Okay, if you do this calculation first, you are going to get amount of okay, let me calculate here. It's going to give us amount of 12,000. Okay, then after that we're going to get our current value, which is going to give us amount of 68,000. Very simple. Okay, 68,000, just like that. All right, now let's proceed to another question. So another question that we are going to do is question 2.2.3. Okay, complete the net change in cash and cash equivalent section for the cash flow statement formats. All right, so this is the last part of cash flow statement. Okay, we have a net cash flow and we have opening balance from the bank and closing balance. Okay, all right, it's very simple, very simple. What we have to do, we go to the balance sheet, to the bank balances. Okay, for the one for the opening and the one for closing is a copy and paste. Okay, opening is for last year, obvious. Closing is for this year. Okay, let's check our balance. For 2021, we have balance of 29,000 is opening 129,000, and they indicated that is a debit balance. A debit balance is positive, okay, and a closing balance they said is credit, which means that we have to show by a bracket 125,000. All right. So now we're left with a net cash flow. How are we going to get it? Very simple. If we are using a formula, we say our x is equal to x plus 129 is equal to negative 125. In other words, we are looking for the amount that is going to give us, when we add with this one, it's going to give us negative 125. Okay, if you calculate, you will get an amount of, okay, let me calculate, 129 plus 125 is going to give us 254,000, a negative one. Okay, I just added these two so that I can get this, but it must be negative because negative 254 plus positive 129 is going to give you negative now. Simple as that. Very simple and straightforward. That's what it wanted on this question. Simple marks. Okay, now let's proceed. Now we're going to cash flow into further detail. Okay, let me wrap this part. Okay, we are going to fixed assets purchase. Okay guys, thank you so much if you have been watching up until into this minute. So please make sure that you have subscribed guys, and also like this video. So for those who want to join our private online classes, they are available now. You can just go to community tab on our YouTube channel, then you will get more detail under that part. So please don't forget to like, share and subscribe. Okay, then let's proceed. We are going to 2.2.2. Calculate the following amount for 2022 cash flow statement. Okay, number one, we have a fixed asset. They said we have to calculate a fixed asset purchased. Okay, 2.2.2. Alright, fixed asset purchase, guys, it's very simple. What you have to do, you use the same, what do we call it? You use the same calculation that you do when you are preparing a PPE note. Okay, remember when you prepare a PPE note, guys, you start with what we call a carrying value at the beginning. Then you add addition, and you subtract disposal at current value, and you subtract depreciation, and it's gonna give you current value at the end. Very simple, which means that addition, because it's purchased, is the one that we are looking for, which means that we have to look for the value of current value at the beginning. Addition, we put X, then we subtract the rest, then we're gonna get the answer. Very simple. This is the formula that you have to use. If you check this formula, it's the same with what a fixed assets or tangible assets note. We start with current value on top, a movement with addition, disposal, depreciation, and at the end with current value at the end. All right, so let's go and check on our financial statement. Remember, we have a fixed asset note, but those amounts they are separate. If we want into a detail, or if you just want a total, we have to go to statement of financial position, because they already posted a current value at the end. Okay, a current value at the beginning they said is 7,988,000, and addition we don't have it, we're gonna get it as an answer. Then we have to subtract what? Disposal at current value. Alright, disposal at current value, if you can go back on the question that we calculated. I think we calculated it, a disposal. Alright, we calculated a disposal on question 2.2.1, which it gave us amount of how much? It was question Roman figure number, let me check. Roman figure number 3. Yes, Roman figure number 3. Okay, we calculated an amount of 68,000 of disposal at current value. Alright, then after that we have to look for depreciation for everything. Okay, if you check on our table, we have depreciation, which was already given for vehicle. It was 298,000, and another depreciation is the one that we calculated on Roman figure number 2. Okay, Roman figure number 2 we get a depreciation of okay, let me subtract this side, minus 36,124. Alright, then the last one we subtract current value so that we can get what? Addition. Okay, current value at the end is gonna give us 876. Okay, 874,600. Alright, then if you do all this calculation, guys, it's going to give you, let me confirm and calculate, it's gonna give you 1,160,624. okay, you have to make sure that you show all these calculations so that you can in these marks. Alright, so that's the answer that you have to get under fixed asset purchase. Okay, the following one is dividends paid, which is very, very simple. Dividends paid. Dividends paid is is different with a tax paid, because tax paid it change. Okay, it depends on whether it was debit or credit. But when it comes to dividends paid, simple. What you have to do, you take the opening plus what paid during the year and you subtract closing. Always the case. Okay, opening for shareholders for dividends, it was 180. Okay, and you add dividends under a transaction. They said on transaction number E, total dividends for the financial year amounted to 552,500, and we check closing and we subtract. Okay, our closing balance was 264,500. Okay, then after that, now we can calculate the total, and we're gonna get 468,000. Simple as that. Okay, then the following one we have to calculate decrease in loan. Okay, decrease in loan, obviously we have to compare the balance for this year and for last year. Okay, decrease in loan. Why we call it decrease in loan in this case? Because the transaction that we have is talking about a paid of loan. Loan has been paid. We didn't go and borrow another loan, which means that it was obviously decreased. But when you are dealing with cash flow statement, sometimes we can go and borrow a loan, which means that it must be positive. This one, because it's dividends paid, we pay, it is negative. All right, so let's check a balance for loan. For last year it was 2,057,600, and for this year we don't have balance, which means that we have to go further and understand the transaction for a loan. Okay, they said a loan settlement received on 28 February 2022 reflect repayment of 38,000 per month, including interest, and total capitalized is 216,000. So very simple. We are looking for balance for this year so that we can calculate what a loan, so that we can get a different year and get the balance. All right, but this is the step that we have to use to get answer correctly. What you have to do, number one, you know that the balance was 2,057,600. On top of this amount, we have been charged interest, which means that you must first say 20,57,600 plus interest of 216, and after that we subtract what? We subtract amount of repayment. Repayment, they give us a monthly 38,000. We must first multiply it by 12 so that we can get a yearly repayment. If you multiply it by 12, it's gonna give you 456,000. Okay, all this calculation is going to give you balance for this year, which is going to be subtracted here. Okay, then it's gonna give you amount of 1,817,600. Then it's gonna give you amount of, okay, let's do this calculation. It's gonna give amount of 240,000. This is the answer that we are looking for. We first come here so that we can get this amount. Okay, because they didn't give us in this question paper, as you can see on the financial statement, they give us the question mark. Okay, so that we must calculate it first so that we can calculate. Okay,